Good day, everyone. On behalf of the Technology Association of Georgia and the Corporate Development Society, I'd like to welcome you and thank you for joining us. My name is Ned Hill. I am Managing Director of Technology Banking at Signature Bank of New York's Venture Banking Group. And I'm also this year's chair of the Corp Dev Society. So very quickly, for those of you not familiar with the Technology Association of Georgia, TAG is an important enabling and catalyzing organization for the state of Georgia. It's built on 4 pillars of connect, promote, influence, and educate, with over 30,000 members and 26 distinct societies, including Corporate Development Society. And we host over 150,000, actually 150 events each year, not quite that aggressive. We're very excited about the discussion today. Before we get started, I'd like to thank our society sponsor, Cherry Beckert, for their continued support. We're excited to have Tom Noonan kick us off and have the C-suite for SaaSOptics. For those of you that don't know Tom, he's a serial entrepreneur and investor locally. As he likes to put it, he's tried to kind of go out to pasture multiple times, and people keep pulling him back in. So I thank him for kicking it off, and Tom, I'll let you take it away.
Thank you, Ned. It's a real pleasure to be here today, especially for the opportunity to talk about SaaSOptics, which I think is one of the most exciting companies in our space today. So, you know, there's always something exciting about a company that bootstraps its way to success. And SaaSOptics is definitely one of those companies. It was started by my friend and former Gartner rep, Dave Ryan, back in 2009, because he was frustrated with the then current business management systems that viewed customers as transactions and not really recurring relationships. And, you know, every aspect of the business relationship between a SaaS company and their customers is about that recurring relationship and enhancing the customer experience. We all know about the word churn, and we certainly don't want our systems driving the churn in our businesses. And Dave set out to change the world. And when my longtime friend and co-pilot of so many of my businesses, ISS, JewelX, and many others, Tim McCormick, joined Dave in 2015 to build SaaSOptics into a category leader, I knew that it was time to invest. And I mean, you look at what this company has done in just a few years. Today, they're approaching 1,000 customers and managing well over $7.5 billion in revenue management for their customers. So, you know, from my perspective, the future is very bright for this team. I'm honored to be an investor in the company and an advisor to Tim, David, and Clayton. They're all seasoned pros with successful careers as entrepreneurs. And as all businesses transform their relationship, including their pricing, packaging, and delivery models with their customers, they're going to increasingly move toward SaaS subscription models. And SaaSOptics will be the beneficiary of this seismic shift in our industry. To tell you more about their exciting future, I'm going to turn this over to Philip Lewis of Fulcrum Equity Partners. Fulcrum was the lead investor in the company's recent financings. And Philip, you can drive it from here. So thank you and good luck.
Great. Really appreciate it, Tom. Thanks for setting this all up. You know, for those who don't know Fulcrum, we're a growth equity fund here in Atlanta, investing and, you know, rapidly growing B2B software and healthcare services businesses. You know, we actually got originally connected into the SaaSOptics story. And so Dave Ryan, one of the co-founders, had a company before this called Marketing Central, which actually built up and sold to Unica. And our partners, our founders, had invested in that pre-Fulcrum. So we were aware of this business from the start. And as we started looking at it, we started seeing a lot of prospects coming to us that had all their financials on SaaSOptics. And when you kind of see company after company coming to you with SaaSOptics on, you say, okay, well, maybe this should be something we should look at investing in ourselves. So we've invested in a couple of rounds now, and we're extremely excited about the business. Basically, every one of our SaaS companies uses it, so we definitely are drinking the Kool-Aid ourselves. Before diving too much into the story, it'd be good just to kind of hear from each of the members of the team real quick. They'll give you about a few seconds on their background, so we'll just kind of go down the line. And Tim, you want to kind of just kick off with your background, and then we'll jump to.
Sure. Thanks, Philip, and thanks, Tom and Ned, for kicking us off. I have been friends with Dave Ryan for well over 25 years, and Tom Noonan was probably the first guy in Atlanta I met, and Dave was the second. So those have been very great relationships. Never had a chance to work with David, and as we all know, David, I think, is on his 9th software company in his career that he started, and Clayton has been his co-pilot along the way for a lot of those. But what really excited me about this opportunity is really the great market opportunity that we have with the subscription model. The subscription model is now the predominant business model that's rolling out. So really the market opportunity here is very, very great. And Dave's focus and Clayton's focus early on seizing the opportunity with focusing on B2B SaaS businesses was really something that appealed to me. And I thought the market would be huge. I thought both Dave and Clayton, what they were able to achieve early on. Tom talked about bootstrapping. They bootstrapped the business for the first 5.5 years. They grew it to 166 customers, $1 million in recurring revenue, and they did it with only $53,000 worth of investment. So I thought that was very, very great, exceptional performance, and I was just really excited to join. So I have 30 some years in the software business, and half of those years was riding with Tom Noonan at ISS and Julex and D&B Software, for those of you that are real old. But anyway, just glad to be part of the team, and just really looking forward to the future.
Great. Clayton, you want to introduce yourself next?
Yeah, sure. So as Tim and Tom both alluded to, Dave and I worked together at Marketing Central. I worked with Dave at Marketing Central. I ran the development team there. And one of the great things, one of the reasons that we were excited to do this business is because in that business, we struggled with the same things that we know a lot of customers, that our current prospects struggle with, a bunch of disconnected tools and a bunch of manual effort that just was really just a difficult way to run a SaaS business. So this business, SaaSOptics, is a direct outgrowth of our experience running the previous business. And that's been one of the great things to help to take something like that and incubate it. And as Tim said, bootstrap it for about 5 years. Seems like we only had a couple of dimes to our name during that time, but we managed to do it and create some happy customers, a great product and happy customers along the way. And so as these guys have alluded to, the future looks really, really bright around here, especially with the SaaS market getting bigger and bigger as we go. It's very exciting to be here.
Great. Chris?
Yeah, thanks, Phil. Chris Weber, COO. One of the cool things is I actually had a unique journey in getting to SaaSOptics. I was actually a customer of SaaSOptics early on, and loved everything about the platform. Really enjoyed the system, struggled with all of the same standard transitioning from a perpetual software business to the SaaS model. So it was a relatively mature business that was making that transition. So in a lot of ways, it was operating like a startup in the SaaS space. We kind of bought in, or I personally bought into the hype around an ERP system, one system to manage kind of all aspects of your financial operations. Went through the long, expensive, and tedious implementation of one of those ERP systems, and then kind of realized, man, we have the breadth of functionality. It's definitely great. It's all in one system, but we're now lacking the analytics. We're lacking all the reasons we went to SaaSOptics in the first place. And it was kind of like an aha moment, like, man, you really didn't appreciate the value that SaaSOptics was delivering to us at that point in time. So that was kind of like my aha moment to say, SaaSOptics was still early on in its career. This is 3.5 years ago, 4 years ago. They're building something that's really cool. I want to be a part of it. Called up Clayton and Dave and just said, hey, look, I don't care where I start. I know you guys are bootstrapping this. Just where do you need help? And let me be a part of it. Because I thought it was an incredible story at the time, and it just gets more and more exciting. So it certainly has lived up to those expectations, relocated for the job, kind of went all in, and have been excited to be a part of this incredible team.
Great. And Amy, you want to give your background real quick?
Sure. Yeah, I joined the team back in March 2019, which seems like yesterday, honestly. And it's been really great. We've been part of the high growth year last year, adding almost 50 new team members. So that sort of makes it exciting to join a company when it's sort of on the right up versus maintenance mode. So I'm really excited about what's next.
Great. Let's back up to the founding. So Clayton, you're there kind of day one, coming out of having worked with Dave before. Kind of talk about what those first days were really like. Well, give kind of people on the panel here the struggles of getting something off the ground from the very start.
Yeah. So yeah, in the very early days, we were confident, I would say, about the market potential, because at the time, it's not so obvious now because the market has evolved so much, but at the time, there was really only two options for an early stage SaaS business. Live with all the chaos of a bunch of disconnected tools and everything like that and all the manual effort and hope to grow, or go out and buy a great big expensive ERP like Chris mentioned, that those are your kind of your options. You kind of live with a bunch of chaos and hope to grow enough so you could afford a big system, or you just kind of had to go out and buy a big system, which very few early stage companies could afford. So we knew there was a market opportunity there, and there was nobody really exploiting that. And so the rest of it, I don't want to oversimplify it because there's a lot of hard work and a lot of dedication and time required. But the overall idea was, let's build a great product and make happy customers. Great product, happy customers, and incubate from those two pillars and incubate the business like that. And so that's what we did. We got to some cash flow fairly quickly, which was great. Because as Tim mentioned, we didn't have any money, so that was good. So we got to cash flow fairly quickly, and from that point on, just evolved the product as the market was moving and starting to grow. That was really great timing by and large, because the market was evolving pretty quickly, especially in those early days. And so we kind of were able to adjust as the market changed and go from there. It was great.
Yeah, no, that's awesome. One question maybe for Tom Noonan here is, as some of these people on the call think about it, how do they should they think about those first few hires that a company makes? How do you look at when you're working with a company or founding a company around those first 3, 4, 5 hires that you look to make?
Man, it's a really good point, Philip. And I think, you look at Chris Weber up here on the top right of my screen, the first couple of hires have to be evangelists. They have to just totally believe that what you're doing is all about changing the world. It's not a job. It's not something you show up for 8 hours. And so, if you look at the ISS culture, and I see the same thing in all the great companies I work with, SalesLoft, Terminus, Full Story here in Atlanta, SaaSOptics, certainly, there's a passion for what it is you're doing. As Clayton said, great product, happy customers. There's a passion, for the mission of the company. And it's a true passion. It's not a job. And I think as entrepreneurs, we are irrational to begin with. We start things that people say either the world doesn't need or it's impossible. We do it for no salary and no benefits to get it off the ground, because, unless you're paying yourself, nobody else is going to pay you. And I think, to your point, that first year of company building, and I think it's a real challenge for CEOs today and founders to try to build culture virtually, because, we've not been in a work from home environment. We've been in a I live at work environment, and our employees are getting burned out. Because home is work and work is home, and there's no separation. But to answer your question, I think the most important attribute of your first and early employees is, are they absolutely passionate about this mission, and can they be evangelists for it?
Great. No, that's informative. I think transitions really well over to Chris. You know, you mentioned being, you know, a customer and seeing this problem. So maybe talk a little bit more about being on both sides of the table. You've been on the customer and the user standpoint, and now you're, you know, president and COO, and, you know, helping run the company. So maybe talk a little bit about kind of coming over and, you know, that transition.
Yeah, I mean, I think Tom makes a phenomenal point. It's important to find those people and hire them, but I'd also argue your earliest employees are actually some of your first customers, right? And whether you acknowledge it or not, they're invested in you as a product, as a company, and they're buying into that vision, and they're right along that journey with you. Your first couple customers, and I was fortunate enough to be alongside of those, and at the time I didn't realize it was the largest customer. And after the fact, it kind of was talking to the sales rep, was like, hey, help me understand something. Like, I kind of got the sense we were one of your largest customers. Is that the truth? He's like, oh yeah, by like a large margin. And I was like, okay, cool. Well, you know, can't tell the rest of the team that. We'll keep that between you and I, but I see the vision, and I was bought in before I ever became an employee of SaaSOptics. And so if you're looking at bootstrapping a company, you know, having those prospects and turning them into customers and really passionate customers, they're taking a gamble, and they already have a little bit of skin in the game by purchasing you early on. So leverage that feedback, you know, help, you know, get them early on. And some of our earliest customers are still our most passionate, most vocal evangelists of SaaSOptics. And so if you're talking about bootstrapping and scaling the company, it's a phenomenal experience when somebody's so passionate that they're willing to join the company. And, you know, I experienced that myself, but we've now had that happen a few times as a company. And that's really cool, because also as you think about how do you grow the company and how do you scale it and bootstrap it, finding somebody that is really, really passionate about the mission that you as a product or as a company is serving, that's somebody that you can deploy in kind of any capacity throughout the organization. And that's kind of what I realized when I was talking to Tim, Clayton, and Dave early on. It's like my skill set, my background was finance and accounting, manager of financial operations, Salesforce, you know, a bunch of things that weren't necessarily relevant, right? Very quickly in the conversations is like, well, here's the tactical pain I'm in. I know you're over here. And I'm like, I don't care. Just want to be a part of it. And that's when you get somebody who has that passion. And I think even as we've kind of scaled out of the bootstrap mode, those are the attributes we still look at for any hire we make. You know, that attitude of like, it doesn't matter. Like, I'm all in it for the team. I want to get the job done. And I want to be a part of that collaboration process. So, you know, those early attributes, what you look for early on is just as important at a later stage. If you get the opportunity to hire customers, and certainly encourage you to try to do so. It's a great validation that you're on the right path with where you're going as a product and as a company. And then also leveraging them into your sales force, right? Like, I mean, if you only have a couple people and you're bootstrapping, trying to get referrals, trying to leverage those early customers to help grow as a company is a phenomenal avenue to continue to bootstrap. And then, you know, and I was doing that as a customer, and then found that those same skill sets and that same passion actually carried over a little bit more so. I think the one thing that they don't necessarily tell you about is they say, find something you're really passionate and love about. Well, I found that here. The problem is now that's all I think about and all I care about. And it really, I love it a little too much, arguably. But we have just an incredible opportunity. I guess the only other thing I'd add there is, in those early stages, and I got to experience a little bit of that, Clayton is much more knowledgeable of it, is you kind of know where the opportunities exist. And like, it's just a matter of really weighing the opportunity costs. You have limited resources and limited budget. So the opportunities are very clear. And that's almost the story that people don't necessarily paint as much about the bootstrapping approach early on, is just, you know where the opportunities are. You just don't have the means to seize them. And it's kind of that inflection point of where you kind of transition and say, okay, we clearly know where those opportunities are. How do we transition out of a bootstrap mode, or how do we generate more cash flow to achieve that? So just a few points I wanted to add there.
No, that's great. I feel like you're kind of doing my job for me with these transitions between all of you guys. So going over to Tim real quick, you know, you had ISS, JewelX. I mean, your background, you know, having worked alongside Tom, and you know, you could have had a pick of a lot of different companies. You know, Clayton and Dave founded it, and you came in really, really early as the CEO. And what were those opportunities that you saw that existed that said, okay, this is going to be my next thing. I've got a couple of really good wins here. This is the next one that we're really going to take and scale.
Yeah, as I said, I think the number one attribute that I saw early on, and the blood, sweat, and tears that Clayton and Dave and the founders put into it was really exceptional to grow the company the way they did. They had essentially 6 or 7 employees for the first 5.5 years. 3 developers, a salesperson, an implementation person. They would sell a customer via an inbound lead, and they would sell the customer, implement the customer, get the customer feedback, and then rev the product in the very next month. And to this day, we still have a monthly release cycle, and we still are driving more and more value into the product based upon our customers' feedback. So that model to me was unbelievable, as well as the market opportunity with just SaaS businesses in general. And that was one of the early on kind of obstacles to raising capital. When I joined in early 2016, there was countless venture capitalists that were supposed to be smarter than all of us that really didn't understand the size and the velocity of the growth of SaaS, and we were left scratching our heads on how could they not see the opportunity that we saw and that we're playing in today. We estimate there's about 50,000 B2B SaaS businesses globally, 25,000 here in North America, and 25,000 rest of the world. And that's a huge market. You also look at the incredible supply chain in this market with all of the incubators and accelerator programs that are in almost every city, major and minor league cities all over the country and all over the world. This is now our supply chain where they're turning out much more mature and capable companies at a much smaller size than ever before. And these are our customers. We love those customers at 1 to 2 million in revenue. So I saw this as an unbelievable opportunity, to get on board on the ground floor of an opportunity and grow it. And it's probably one of the other reasons that I saw an incredible repetitiveness to the problems of these that the early stage B2B SaaS businesses were having. They're running the business essentially on Excel. They have disconnected systems. They have a CRM not connected with the general ledger, and it's chaos. And all of our SaaS businesses, we know are the value of those businesses is calculated on a multiple of ARR. Your ARR is essentially a sum total of all your customer term agreements, and all of your SaaS metrics and KPIs that are used to measure the health of your SaaS businesses is now being managed in a spreadsheet. So unbelievable, repetitive, very homogeneous market and problems the market is experiencing. So I just really saw that opportunity as wind at our back, and today, getting close to 1,000 customers and nearing 100 employees has really been a great dream come true.
Yeah, no, that's really great. And I think as you near 100 employees, this kind of goes back to something Tom had said around culture and really finding those first hires to fit into culture. And a lot of people on this call won't know, but I actually had the opportunity over kind of the last year to work as kind of an operator in residence with the SaaSOptics team. They were gracious enough to open the doors to me. And it was funny because I spent about half my time with them, half working with Fulcrum. But I'd go into the SaaSOptics office every day, no matter which side of the fence I was working on, just because the culture that you guys have built is just phenomenal. And a lot of that has been driven not just by the founding team, but Amy has come in and joined and really helped drive a lot of the initiatives around culture. And I'd love to kind of hear more about what you've done to foster such a positive culture in the business. Both leading up to COVID work from home, and then really through it, and how you've maintained that.
Yeah, absolutely. So I think it's of course, so important. And at the time that I joined, it was sort of that inflection point where I think we were hovering right around 62 employees or so. A lot of those team members were sort of brought on through organic word of mouth or whatnot. And, we were going through that scaling year of adding almost 50 additional employees. So when you have that kind of influx of new hires and then tenured team members, there is a lot of change. And we did a lot of work over the last year or so to introduce that change, but always do it in a really transparent manner and a consistent approach so that people trust what we're saying, right? And the other thing that's super important that I take to heart is really explaining the why of, behind why we're doing what we're doing and not just because it's time, right? So even pre-COVID, I would say we have a very healthy culture. Philip, you're part of that. You came and saw it every day. It really boils down to that. We don't, stray from who we hire. We're very methodical in our recruiting process and our candidate experience, and then also our employee experience to make sure that, again, I don't know that everyone's going to be an evangelist or so bought in as like Chris on the front end, which is amazing. But I think we're really lucky that I truthfully think the majority of the team have that consistent mindset that, we're all trying to obviously produce and enhance a great product. And then equally as important is make it a great place for everyone to work, right? We're there more than we're home, and we take that to heart. So again, shifting gears a little bit, pre-pandemic, post-pandemic, we've done all the traditional things I think that a lot of companies have done and are facing that Zoom fatigue or the happy hours or whatnot. So we have done a couple new things to kind of refresh what's going on and make sure that people stay really connected and know that, we care and that we're available because everyone's kind of in a different stage right now.
Yep, I totally understand. One thing I forgot to mention, there is a Q&A box. If anybody has any questions, we're monitoring it. If you have any questions, just throw it in there and we'll just answer them as we go along. But kind of building off of culture, I think, Clayton, you're probably uniquely positioned to really think about this. And, what's really special about working at SaaSOptics?
Yeah. Oh boy, it's hard. It's, as a founder, I think it's hard to answer because it's like my child, right? It's hard for me to be objective about that. But I think actually one thing I would say is again, this gets back to being a founder. One of the most fulfilling things about this business is, to me personally, and I know Dave feels the same way, is the team. So it's great when your customers like your product. It's great when you grow. It's all that stuff. All those things are awesome. They're wonderful and they're fulfilling. But for me, nothing is as fulfilling as the people that we have here and seeing them. It's a bunch of, I've got gray in my beard. Tim used to have a bunch of hair. So I'm getting a little bit long in the tooth, but it's awesome to see a bunch of youngsters around here starting their lives and building their careers and everything. And we just had a rash of babies get born. Holy smokes. How many are we at?
Oh my gosh, I don't know. We basically have a softball team at this point.
Yeah, there you go. That's exactly right. So I do think that's special. These guys, back when we were in the office, they would frequently, get the team here would go and hang out together after work and things like that. That's the kind of stuff that you can't force that to happen. I think it comes from consistent behavior and the transparency that Amy talked about. Culture is basically built by consistent behavior. And it's not ping pong tables and foosball and that stuff. Those things are nice, but that's not what culture is. Culture is consistent behavior. And I think we've done a fairly decent job. We make mistakes, all founders do, but one of the things that we've gotten really right is this team. And I think that's why it's special to work here.
Chris, anything you want to add there?
I mean, one thing I want to add, which I think paints Amy's story in a unique light as well, is just the attitude that we've, all of our team members have is like they're just all bought in as far as whatever needs to be done. They're willing to help and assist, and it's interesting that mentality that I communicated earlier about like joining early on. We've been able to maintain and facilitate We have a very collaborative approach, and I think that is very unique as a company, right? We've been able to avoid kind of the siloed departments or making decisions in silos. And so it's all, the end goal, the company's goal, the North Star is ultimately revenue and revenue growth. But everybody's kind of empowered to think creatively about how you change that. And where it relates to Amy's story is originally, it was kind of that bootstrap story. You're so stuck in the day-to-day tactical pain. The tactical pain was, myself and Dave Ryan were doing all of our employee onboarding, some of the recruiting. And so, we said, okay, well, we need an entry-level position, somebody just to help Dave and I kind of do this. So we posted the ad on LinkedIn. Amy kind of reached out to me and responded and said, look, I get this is, what you guys are looking for right now, but I think that might be a little short-sighted. I would love to have a conversation. I'm all in. Like, everything that you're communicating you need, I can do. And I can also help grow and scale and provide much more strategic value and help install that culture. And that was kind of like, if you're on this call and you're listening, like either you want to found a company and you're figuring out how you navigate through it, or you want to be a part of a similar journey, right? Being able to tailor your message and say, yep, I know exactly where you're at. Here are the tactical pains that I can assist with. But then, by the way, here's the strategic value that I can add. And I know where you're going with the organization is pretty cool. So ultimately, Amy was able to completely reshape the way that we were looking at this opportunity. And it's been amazing to watch, because it's just like, you don't know what you don't know. Like, you think you need this, but then we just realized once Amy arrived here, how much more there was to the role and to the culture, and helping ensure that while we had done a good job early on in scaling that, but to take it to the next level, we really did need somebody that was focused and dedicated to it. And Amy's done an incredible job of that.
Yeah.
Yeah. I'd add a couple of more things here, Philip. I think it really starts with the product. I mean, we're a product company. We sell a service, but it comes down to the product. And now we're on 11 years of monthly releases. It's really an excellent proven product. And when you have that asset, in your camp, what is great to see is all of our people are extremely hardworking and results-oriented team and culture. And on top of that, our people are genuinely, they care about our customers and their teammates. As I always like to say, you spend way too much of your life at work. So you better like and get along with the people you work with, because you'll be miserable if you don't. And life's too short to go through that. And we really have a great team that backs up everybody and watches each other's back, and generally very much cares about the well-being of our customers and our teammates. So that's been something that's been, I think, very unique.
Yeah. No, I couldn't agree with that more. What's interesting, one of the things that sort of came up when chatting with some other funds and how they look at SaaSOptics, a fund actually mentioned to me they were talking with a company and they were going through the diligence, and the company was sending them numbers and said, okay, what financial diligence do you need to do? And the investor replied back to them, oh, we see that your reports are coming out of SaaSOptics. We're good. Didn't need to do any more financial diligence. And that was, really incredible to hear, just, the power of your system. But, Tim, we're seeing a couple of questions coming in through here around kind of the fundraising. Maybe elaborate, twofold. One, how has SaaSOptics actually helped you when going out and raising funds, for SaaSOptics? And yeah, let's start there, and then there'll be a little follow-on question coming out of that.
Sure. That sounds good. Well, if you work for a SaaS business, you know that the metrics and KPIs are very, very different than a product company, but extremely important to the success of the business. So since we use our own platform and we've used it since the founding of the company, there aren't any gaps in our metrics and our KPIs from the beginning of time through today. And our platform tracks over 100 different SaaS metrics and KPIs, from ARR, MRR to logo and revenue churn and retention, customer lifetime value, CLV to CAC ratios, you name it, on and on. It's extremely powerful to be able to tell your financial story and talk about the trends and all of those metrics from the beginning of time. I can go back to 2016 and tell you that our average ARR per new customer was about $5,000. And it's about 15,000 today. So you have the ability to tell the story, and it's all in context of the momentum and forward-looking trends in your business rather than the traditional rearview mirror P&L statements and balance sheets. So I hear more and more as I talk to investors, and the investment banking community always loves it when they're dealing with a SaaSOptics customer, because it quote unquote, makes their lives 10 times easier. And certainly our customers talk about, the need to get funded and stay funded, and the ability to raise capital once you start. It really is a never-ending thirst for, the metrics and the ability to communicate how you're doing over time since the last investment to the next investment, and are you tracking and trending in the right direction based upon the investments you're making in the business. So it's been a lifesaver, and the ability to communicate about your business is there's really nothing that you can. It's really just about what you want to share, because there's so much you can share.
Yep. Maybe, there's actually a question that's come up, and it kind of dovetails, pretty nicely. And, Chris, I think you might be able to kind of go with this one. But, as you look at a system like SaaSOptics, it enables you to stay off of an ERP for longer, while you do it, integrate into the NetSuites and Intex of the world. It allows you to stay with a QuickBooks or a Xero longer. And, as you kind of think about the product and where it's going, you guys were the first to market. Other competitors are, coming up, you hear about them. How do you guys stay ahead of them? How do you guys continue to evolve the product and, continue to be the leader in the market?
Sure. Yeah, I think that's a great question. I want to kind of tailor the answer a little bit to as you're sitting out there and listening, like, how can I apply some of this to my business or a future business that you're looking to start, et cetera. I think it really it centers around understanding where we fit in the marketplace and what we're really good at and the opportunities that present itself, right? Like Tim was talking about the metrics and presenting those to the investors. One thing that's kind of the key there is, and relates to ERP, is one of the advantages an ERP has is that it's all of your data is in one system. So it's that one pane of glass, that one view where it's all centered around that. So that was part of the vision early on, is making sure that the SaaS metrics were layered right on top of your GAAP financials, right? So if you have an audit requirement because you have an investor and your financials are getting audited, right? But your valuation is driven or indirectly derived from these SaaS metrics, are those SaaS metrics pulling from the same data set as your GAAP financials? And the answer early on was no. A lot of times it wasn't, because it was spreadsheets, et cetera. So if an investor indirectly is basically paying for that audit, like making sure it's the same data set was a unique value. I think for us, though, we were one of the first to the market, if not the first, that really served B2B subscription management, other B2B subscription management solutions. And we've stuck to that. And I think that's really key, is understanding what our ideal customer profile is, and then understanding as they go through their evolution and their journey, we think about that as we build the product and we build the product roadmap. What's the next pain point that they'll have? It starts with, GAAP revenue. It starts then with analytics. Collections is a huge component of that, getting those orders, that cash in the door. They're likely iterating on their pricing and packaging, so flexibility is really key there. And we've stayed true to that as we've evolved. And I think that reflects itself in some of the other ways we've operated as a business, including our funding strategy, right? Like that whole, why did we choose to bootstrap, is because we knew what our market cap was. We knew the market that we were going to serve. And so we structured a business around that. We didn't necessarily set out with an ambitious goal of, hey, we want to, be the next Google or Facebook, like all too common, or I'm the Uber of this, right? Our approach was more, this is an underserved market. There are solutions potentially in there. They're very expensive, and they provide a breadth of functionality that our clients don't really need, right? And that's why we've continued to iterate on that. As we look to take the product and evolve the product and how do we continue to achieve more growth, we're going to stay true to that, but we're going to add on pieces of functionality that directly, scale with that. So you saw us as a company, we now have integrations directly to Intact and NetSuite, two of the larger recognized ERP solutions. So we said, yep, we acknowledge that at some point there still might be demands or needs to implement an ERP, but we're going to defer that decision down the road. And when that time comes, okay, implement for the things that SaaSOptics isn't already doing. So, one of the big concerns is that an ERP is costly, takes a lot of time to implement. So as we look at that, well, could we actually partner with them, reduce the number of modules that you need, reduce the time to implement those? So it's actually an interesting dynamic where you might think that an ERP is competitive. We've actually spun it so that it's a natural progression of our customers' evolution. So as you look at your own business, staying true to your ICP, staying true to your mission, and then finding complementary, add-ons or other areas that you can serve, and then also evaluating your competitors. Maybe they're not necessarily as directly competitive as you might think they are.
Yep. No, I think that makes a lot of sense right there. One other that I'm seeing come up here, and Clayton, I think this goes back to the length of time was Bootstrapped. Was there kind of a time early on where you were sitting there saying, what have I done? What am I doing here? Times that you thought that it might not have worked, and what kind of kept you going through those times if they did pop up?
So yeah, there were some times they were like a little bit nerve-wracking, but I'd say stubbornness. Dave and I share that quality. Pretty stubborn, and so yeah, just kind of I'd say it wasn't clear. It wasn't always clear it was going to be that we'd be successful, but I would say it was clear to Weber's point. It was very clear that the market was underserved and that there was a need there, that there was a product there. It was very clear that we could get what the mystical, magical product market fit that a lot of people are after. It was very clear we could get it if we just kept on focusing on what we were doing well, and the feedback we're getting from customers. And the other thing too that we started to see early on as well that Weber mentioned is passionate customers. So when you first get your first few customers, it's all about these people can't fail. We absolutely cannot let these people fail, right? They've got to be, not only can they have to be successful, they got to be passionate. So once you see that a few times, you can it's easier to believe in the uncertain future. Like, well, we've got something here and we've got something on the sales side now. We've got a great product. We've got some things that are lining up. So it's easier, I think, to be a bit more, have a bit more faith in the future. That's not saying it's just casual, tiptoe through the tulips, because it's not. There's some nerve-wracking times for sure, but yeah, if you've got some things like that working, it's a little bit easier to have faith. And those are certainly the things you should focus on. To Weber's point, if those of you who are out there are thinking about doing your own thing, yeah, make sure the customer's successful and turn into passionate advocates. If you got your sales thing working and your customer success thing working, it's easier to have a little bit of faith.
So Tim, kind of, looking at you a little bit, a different variation of that same question is, you join, the company's growing. As you go through the various stages, kind of seed funding, A, now B, what are the things as those stages progress that kind of change them, the sort of what keeps you up at night question? What might have been the way you'd answer that, at the pre-seed, the Series A, and now kind of the Series B, approaching 1,000 customers, or what keeps you up at night through the years, how that's evolved?
Yeah, that's a great question. I mean, early on, certainly it was, you're always wondering, have you met, product market fit? And I think early on when I met with Dave in late 2015, I thought that they were very close to getting product market fit with 166 customers. But if you really peered into under the covers, there was really different customers using different aspects of the product. But I think, in that next phase through after the seed funding up through the Series A, we've got very consistent with selling customers on pretty much most of the platform, taking advantage of kind of the three major functions: the revenue recognition, the billing and payments part of the solution, and then the SaaS metrics and analytics. All of them, all the new customers started really using most of the package, and that probably was the time where you could declare a product market fit. And then I think it shifts to what we touched on is not only getting the right people on the bus, but getting everybody in the right seat on the bus, headed in the right direction, and really understanding what the objectives are and the team alignment. And then, beyond that is filling out the management team and getting, the right people and the right experience to be able to scale you to the next level. And, now it's, it's getting very interesting. We're beyond the Series B round, and plenty of, growth ahead of us. The, subscription model's not going away. There's thousands more customers ahead of us just playing the game that we're playing. But we have many new product ideas now and directions we can take with the platform to continue to grow and expand our total addressable market. So you think about, new investment and where would you go? And that gets a little, tricky and intimidating about where you would place those bets. But I think, there's a number of product areas, and, we've not even begun to expand internationally. So there's the geographic expansion that's also on horizon. So it's really about understanding where the biggest bang for our growth buck is. But over time, I think, it just shifts to the needs, the scaling part, and what really Chris has brought to the organization is his process view and everything he looks at. Not only is he brilliant from the product management standpoint, because he lived the problems that our customers have, and he has a vision of his own to how to improve the product and where to take it on some of the same themes that the company was founded on. But he has navigated us to be able to scale our internal processes, and not thinking about next week or solving a particular customer issue, but really scaling the company from a process standpoint, including systems. And that, to me, has been really the turning point that said, we now have a foundation to scale this business, and we can now, in good conscience, make these investments in whether it be a new product or whether it be expanding internationally. Whatever we set out to do, we feel is the best growth vector. I think the company is now positioned to take advantage of that. So I don't know whether it exactly answered your question, but it's certainly the priorities shift over time. And, I think we're in a really great place to continue, growing in different areas.
Philip, if I may want to add on to that too, because I think it ties in and it's central to everything we've talked about, our team culture, just kind of the get it done attitude and empowering people to make change. But when Tim was talking about scaling, if you think about the bootstrap mentality, is you got to get a lot done with very little resources. I mean, that's the simplistic way of looking at it. We haven't lost sight of that. I mean, we're even guilty of it here, right? I think all too often, especially in the SaaS space, people like to use employee count as a growth metric or as an achievement. And if that kind of runs a little counter to the bootstrapping mentality of like, well, how do we do more with less people? Right? We led with, we're approaching 100 employees. We've added this number of employees. And that is so common in the marketplace. I'd actually love to see us continue to grow and achieve the level of revenue year-over-year percent growth with fewer people. Because what that results in is a better culture where people feel more accomplished. They're achieving more. Every year they're able to achieve more. And we're driving and empowering them through processes, systems, and frankly, other SaaS solutions. And so I think that is a mentality of like, you're asking Tim, like, what are the worries and concerns that have shifted? From my standpoint, my worry and concern is making sure we don't lose sight of that, right? Like, just because now you've transitioned out of bootstrap mode and you have funding or an investor that's supporting you financially, you don't necessarily want to just achieve that growth by hiring more salespeople unless the metrics support that, right? Like if you can do more and there's a huge opportunity, that makes sense, but you don't want to just drive that growth through employee headcount. So we're looking at things like our customer acquisition costs and what that corresponds to our customer lifetime value. A huge key metric that we're watching closely is your ARR, annual recurring revenue, to full-time employee equivalent. Right? Like if we can keep driving that metric up, that's incredible. That means we are continuing to drive growth, not through just adding more employees and doing the same, but each employee getting more and more efficient in the way that they're doing their role. So that's just one aspect I wanted to add to that. I think hopefully a lot of people in attendance could take back to their organizations.
Yeah.
Yeah, I'd like to add on to that too. Sorry, Philip. I'd like to add on to that too. Getting back to the whole, how do you get through some of the tough lean times? It's kind of in line with what Webb was saying there. I'd say one thing you want to do is find something to wear as a badge of honor. And I'll explain that real quick. We got to 100 customers with only 4 smelly dudes in this business. And that was something I wore as a badge of honor. Now, to Weber's point, a lot of times people look at employee count as a thing, and they might look at you as a risky bet. But I hung my hat on that for a long time, because you can't have 100 customers. You can't support 100 customers if your product isn't awesome. If you got a buggy product and you got a bad implementation process, you just can't support 100 customers with 4 people. You just can't do it. So it was one of the things that helped as far as getting through some of the tough times. That is also a marker. Hey, we're getting something right here. So it's not doesn't guarantee success, but it can get you through some of the tough times if you find something that's a badge of honor to lean on, especially if it's a bit counterintuitive.
I think that might have been the first time on a tag panel 4 smelly dudes was used as a as we kind of are coming up here, one thing that Tim mentioned early on was just the size and velocity of the SaaS market. And Tom, Noonan, I think we'd really like to hear a little bit maybe around what you're seeing as an investor and kind of advisor to a lot of SaaS companies and how the SaaS market is moving, and kind of weave that a little bit into kind of where SaaSOptics plays and how you think SaaSOptics fits into the future of the velocity in this overall market.
Sure, Philip. I think the SaaS market is moving not because of anything the SaaS market is doing, but because enterprises prefer a more frictionless experience with their business applications. And so, you think about, Tim mentioned Dun & Bradstreet Software. When Tim and I worked together at Dun & Bradstreet Software in 1990, the mainframe was all the rage. The mid-range, the AS400 was coming in, and client server was coming in, but it was all the same model. It was complex software managed on complex infrastructure by companies that otherwise were in the business of doing something else. They were making tires, or they were building engines or cars or airplanes, yet they had to have these big, complicated IT systems. So look, the SaaS market, we're at the very, very beginning of this. And, delivery models of utilities, whatever they are, applications, infrastructure, software, et cetera, is becoming the norm. The concept of a data center is becoming a dinosaur. So what does the future hold for a company that literally, I think that literally out of the box creates your entire back office for you? The number of my companies that call me when they have about 15 customers, and the CEO, who's usually the founder, who's a technical expert in the system that he or she is delivering to their customers, says, I don't know how to do this billing and invoicing and, managing my financial books and payables, and I'm adding employees. It is a pain in the back for them. And so, I think I'm an investor in 72 companies today. Probably the biggest one is, over $100 million private. And the smallest one is still trying to figure out what kind of product it's going to build. But I would say 70% of my companies today use SaaSOptics because it is just so obvious. And as a board member and an investor, Philip, I think you made the point that someone said we viewed their financial data, and the fact that it's all being maintained in SaaSOptics allows us to complete our diligence now. I can tell you a very quick war story. In 1998, ISS acquired a company called Netrix, and we launched the industry's first managed security service. And managed security services was a subscription business. My board, made up of Kleiner Perkins, Greylock, Sigma, Sam Nunn, AT&T, very seasoned, accomplished investors. We almost had a palace coup in trying to communicate what we were doing, because our expenses were going up, our deferred revenues were going up, but our revenue was only trickling in ratably, which is the recurring model. And I told Tim and Dave, when Tim went to work there, I said, I sure as heck wish I had SaaSOptics 20 years ago, because it would have helped eliminate some of the board fights that almost ended up in a palace coup. So the future is very bright for SaaSOptics. As an investor, I look at three things. One, the market. Two, the leadership of the company. And three, the scalability of the company. And I tell you, I can check all three boxes of SaaSOptics. And, for that, I can't imagine building a SaaS company today and not doing business with SaaSOptics.
So I'll sign me up for another check.
Yep, please. My commission letter.
That's great, and I really couldn't agree more. Obviously completely bought into it, and have our companies all really running SaaSOptics as the source of truth. So everybody's using the same information, the same way to calculate metrics. It makes our lives so much easier. I think as we're kind of wrapping up here, would love to hear from Tim, Chris, Clay, and Amy. Kind of what any one of you, what's the future of SaaSOptics? Where do you see this going, and what's the future hold?
I'll take a stab. I kind of gave you a little version of it. I think the future is incredibly bright. As I mentioned, the subscription model's not going away. It's here forever. And I think the predominant preferred business model. We have many new product ideas and directions we can take our platform that will continue to grow our total addressable market that we are began implementing this year and will bear fruit in 2021 and beyond. And again, the international is still out there to be had to expand internationally. So again, a number of different investment opportunities to continue fueling the growth. But we've got here by focusing on a segment of the market that is still growing extremely strong. And we're going to continue kind of seizing that market opportunity as we place our bets here in these new product areas as we grow. So there's just a few of the reasons I think the future is bright. Chris, you have anything else you want to add?
No, I completely agree with everything from a growth perspective. And then we also don't want to lose sight of a lot of the aspects that we talked about. So it's not only placing some strategic bets, but making investments in the things that we've done well and want to continue to do. And so, that'll be a constant, conscious effort to continue to make those investments and not lose sight of the incredible things that we've accomplished so far from that bootstrapping mentality. Amy is a huge part of that, and like making strategic investments like that. It's not as cool of a story as kind of like all the growth and net new things, but I would also say that's the reality of it is we need to continue to make the investments towards what's going well and what's working, and ultimately investing in our customers too, listening to them, understanding, their needs and their evolution, because we're right alongside, our almost 1,000 customers growing and scaling their financial operations, listening to them and understanding and making sure that we're continuing to meet their needs. I think that's the really powerful thing about the subscription economy and the SaaS model in general is our product is going to evolve right alongside our customers. And that's the huge kind of benefit of this is as they're evolving, we're evolving, and we need to make sure that we're evolving alongside of them. And if we do that, we've got a really bright future ahead of us.
Oh, that's great. What a phenomenal story. And I want to thank the four of you for getting on today, telling a little bit of the SaaSOptics story. Tom, really appreciate you taking time to kick us off and participate. Tag Corp Development, thank you for the invitation. And most importantly, thank you to everybody who joined in today and is going to listen to the recording thereon. Really appreciate you taking the time to hear the story. So thank you, everyone, and hope you guys all have a great afternoon.
Thanks a lot, everybody.
Thank you.